All right, what is up, everybody? Divine Hood here, coming at you with another daily update on Bitcoin and the crypto markets. Okay, guys, so on Friday's live stream, I did warn about how we could be rejecting from this lower high golden pocket here, putting in an overall lower high on the charts and continuing to see the bigger macro correction continue, possibly to come down to 105K to take out the lows of 107K and continue to our next major support level. Now, we have rejected from that golden pocket, and we are seeing a bit of a breakdown of this ascending channel structure. I warned about this on both Thursday's live stream and Friday's live stream that if we did start to lose this ascending channel structure, then we would see a bigger dump to the downside, potentially to come take out the lows of the second pivot of this channel, if not the entire liquidity that the channel has provided. So we do have a lot of liquidations happening right now already, but we are seeing that breakdown. You can see here on Friday, after rejecting from that golden pocket, you can see we actually did touch the golden pocket and reject from it on Coinbase. We came down to the bottom of the channel. We saw a very small bounce in an attempt to stay within that trend, but we could not maintain. And when we finally lost the channel, that's when we saw the big waterfall down. And we even broke through our local level of support that we had talked about on Friday's stream. Let me turn that box on. We were looking at this 113.5K area of support because it was the anchored VWAP from our all-time high. And anytime you have an anchored VWAP from an all-time high that's in a downtrend and you break it to the upside, oftentimes in a healthy market, after rejecting from a major resistance, you'll come back down, you'll backtest that what used to be your bearish momentum. And if you confirm a flip to support, you can expect the bullish momentum to continue. So it was an area of support we were watching, also because it was the anchored VWAP from our 107K lows. You can see they're in perfect confluence with each other, as well as the value area low of our bigger intermediate range that goes back about till July, July 11th. So a couple months now. And what happened is we just busted straight through it with those liquidation cascades that happened. We busted straight through it. No reaction there. No bull divs on the chart. No, I did not even attempt to trade there. And if you can see what is happening today, actually, let me hide this box of support now so we can get a better look. We have lost the value area low of our 2-month long range. And even today, after making a low yesterday night, we have came back up, bearishly back tested that value area low today, and we are still hovering underneath this value area low, confirming in some ways that we could break down further. And if we look at this level of support that was between 113.5 to about 113K, on Saturday in my Telegram, I posted about a potential ABC correction. If it was going to be a small internal correction, then we could look at the targets between the 1-to-1 and the 1.236 for a level to bounce. And you can see that 1-to-1 fib target was lining up perfectly with the value area low and with our anchored VWAPs. And so if we were going to see a smaller correction here and then make one last push up to finally hit that naked weekly POC above us, or the naked daily POC above us, then I was expecting some sort of bounce from here. But we did not get that bounce, and looks like we did actually hit our resistance up here, so that could be it. And we are now breaking market structure bearishly, even on higher time frames, by taking out our range lows. We have broken market structure bearishly here, and we're maintaining weakness below the value area low of this range. Now, if we take this same trend-based Fibonacci extension and we turn it to our 1.618, you can see that is pretty much where Bitcoin ended today. We did front run it just by a little bit because there was a daily level just above, and I'll cover that in a second. But anytime you start to lose a bigger trend, break market structure bearishly, if that breakdown makes it to the 1.618, it gives you a far higher probability that this is going to be a 5-wave impulse to the downside rather than a 3-wave corrective move and then just continuing to push back up. So we broke our 1-to-1 target. We broke our 1.236 target. We did not see any reaction at those targets. And we pretty much came to our 1.618 fib extension target, giving this a higher probability that this is the start of a bigger impulse that's breaking down that is not completed yet. So I am looking actually at a couple levels of support below, but let me go ahead and explain first. If we turn on our daily levels, you can see that we had a daily level. We have a daily level just below us. And let me make sure that is right there. Yeah, we have a daily level just below us at 111.5, right around 111.5. And if we also pull our golden pocket from the lows at 107K, or about, 107,250, to the highs that we rejected from on Friday, and we look at that golden pocket, you can see that golden pocket is coming in right where our daily level's at. So let's zoom back in onto the 2 hour chart. And let me get rid of this 1.618 now. So what I'm looking at is a potential 5 wave impulse down. And if we turn on this is a new support level that I've been watching for a couple days now, that once we made those new highs, our golden pocket shifted from down here to up here. And now we have our golden pocket and our daily coming in around 111.3 to 111K, where we do have that daily level at 111.5. And if we're going to create a 5 wave impulse to the downside, 1, 2, 3, this could be our consolidation in a fourth wave here. It could even be a triangle here before breaking down and coming to actually hit that golden pocket in that daily, finishing our 5 wave impulse to the downside locally. Now, if this is confirmed to be a 5 wave impulse to the downside, we're going to be looking at a bigger ABC correction. So your A wave would bring you in that impulse all the way potentially down to 111K. Our B wave would retrace somewhere up to close to the golden pocket. And then our C wave, I would expect this in our C wave to break down to about that 105K area of support. Maybe 107K, maybe just taking out SFPing our lows from a few weeks ago from August 31st. But this is going to be the continuation of that bigger correction that I've been talking about and warning about all last week. So yes, higher probabilities for me locally are to continue to the downside. Money flow still looks bearish here. If we zoom out onto the 4 hour chart, money flow into the red now, heavily into the red. We did see, by the way, guys, as we were coming up into that golden pocket, let me turn off some of these levels here, clean this chart up real quick. As we were coming up into that golden pocket, we did see confirmed bear divs pretty much across the board. If we go onto our 8 hour chart, you can see 8 hour bear divs, lower highs in the momentum waves, higher highs in the price action, into our major resistance. Also, now the money flow still looked pretty bullish here, but on NAMI, you can see we had the confirmed bear divs and money flow was already draining out of the asset and actually about to cross into the red by the time we got to that golden pocket. So confirmations both on NAMI and Market Cipher B. If we go to the 4 hour chart, you can see 4 hour triple drive of bear div. Money flow had already been consistently draining out of the asset. You can see on NAMI multiple drives of bear div and money flow bearish divergence as we were coming up into that area. Same with the 2 hour, 1 hour, pretty much across all the lower time frames. We were seeing bear divs as we were coming up into this resistance, giving us confirmation to look for a short. Now, I understand on Friday's live stream, I did not short right away because I saw some bullish CVD absorption locally. But after breaking that very, very local range, and I talked about this in the Telegram, after breaking that very, very local range that we were seeing up here, let's just throw this on. This is just on the 15-minute chart. That range that we were seeing Thursday and Friday here, after breaking that range, breaking market structure by taking out those lows, we were looking at, now that we had broken local market structure bearishly, coming up to our golden pocket. And if we did reject from that golden pocket, it would be a confirmation of a short. Now, I did not short that right away. We were actually live streaming, and because of the bullish CVD absorption, I was not looking at shorting right away. But the second we broke this this value area low down, it was about an hour or so after the stream ended. Let me grab this volume profile and just extend it a little bit more here. It was about an hour after the stream ended, and you can see that we had rejected from the golden pocket, and at the time, we had broken that value area low to the downside. And upon the back test of that value area low right here around 117.2, that is when I shorted there upon the back test. Actually, I think it was right here. So we broke the value area low down locally, back tested it bearishly. Once we started losing that value area low and VWAP and rejecting, that's when I took a short. I still am in that short and have not taken any profit at all yet. So let's zoom back out here onto the 2 hour chart. Now, we are breaking down, and we are breaking down what looks like impulsive price action. So I am expecting one more low to be made, at least locally here, in a 5 wave impulse to the downside, coming down to that 111K support. Once we get down there, depending on where that low is made, we can pull the golden pocket from the highs to wherever those lows are. Right now, I'm just going to, for example, put it on the 618, and you can see around 115.6 is where that golden pocket could be coming in, and we're going to want to watch for a three-wave zigzag correction up to that golden pocket. And if we see a three-wave zigzag correction, we could look for a short and another impulse all the way down to 105K or 107K to complete our bigger ABC correction. So I am going to be looking for a scalp long from this 111K area of support if I have confirmation. Right now, we do not have much confirmation on the charts. Of course, we're not down to that area of support yet. But Bitcoin does look like it's rolling over, and we did have significant bear divs on the chart. Now, if we take our low that is formed right now and we put our low on the pull our golden pocket from the highs that was made on Thursday to the lows that was made last night or early this morning, depending on where you're at in the world, and we look at that local range that we broke down. Let's turn on that local range. This upper range up here. You can see that our point of control of that range is going to be in confluence with our golden pocket. And this to me is going to be acting as a resistance now. Now that we have broken this range down, even if we bounce from where we're at now, say we are able to reclaim the value area low and move up to that golden pocket, I am going to be looking for bearish continuation from that golden pocket, maybe a bigger three-wave corrective move in a W, and then we're going to get WXY all the way down to 105. So we'll keep an eye on that as the price action and the data develops. But now our local resistance above us that I'm going to be watching is between that 115.8 and 115.6K. And also, if we turn on some of our levels, let's go ahead and turn on our new naked weekly point of control. You can see that we have a fresh naked weekly point of control in perfect confluence with our range point of control. And if we turn on our naked daily points of controls, we also have a naked daily point of control in there as well. A naked daily point of control that is going to be at, I think I put this on twice. I don't know why I did that. It's about 117.61, 115.617. That was the proper one. So we have the 618 in alignment with a naked daily and the 0.65 in alignment with a naked weekly. All that to say that this box of resistance above us between 115.6 and 115.8 is going to be acting as strong resistance now. If we turn on our daily levels, we also have a fresh new daily level that's at right in within that box. So this is our local resistance above. We're going to have a golden pocket, POC, naked weekly POC. A lot of resistance within this box that is going to be acting as a tough confluence of resistance to get back above. So that is what I'm looking at. If Bitcoin can even reclaim the value area low, which is around 113.3, if we can't reclaim that value area low, I'm just going to be looking for immediate lower targets. Really, I am already looking for immediate lower targets. I'm already looking at this as impulsive price action to the downside and looking down to come down to about that 111.5 to 111K area of support before seeing a bigger bounce. And of course, if we do come down there, we will have to readjust this box a little bit, or it'll widen the box because the golden pocket will drop to be a little bit lower. But this is our local area of resistance that I'm now going to be watching on the charts. We have broken our local range down. You can see here, broke it down and even back tested it, broke it down, kind of back tested it and continued down here. And then we also have broken our more intermediate range. That's this bigger range that we're looking at. Let me turn off this 113K box. And you can see the value area low. We are below the value area low. Even today, attempting to back test and get back with inside the range, and we rejected. And so far, we are forming consolidation range below the value area low, which to me is a bearish sign. So I expect Bitcoin to continue lower. If we go on to our liquidation heat map here, we go to the last 2 weeks of price action. Well, let's see. Let's go to our Model 2 heat map. We'll go to the last 2 weeks of price action here. If this will load up. Yeah, and really, there is not much liquidity below us until we get down to about that 110K area of support. That 110K area of support did have some liquidity. It shows better on the Model 3 heat map, but really we are looking at the liquidity is still down below us. Now, yes, we do have obviously liquidity above the highs from Thursday because we had a lot of people short this golden pocket looking for potential lower high and for the more macro correction to continue. Uh, but for me, I'm looking for lower immediately, and then depending on what happens here, if we have bull divs coming down into here, I would look for a potential scalp long opportunity. And if I do take a scalp long from this area, what we do need to watch for is just coming back up to back test this value area low. And if we do reject that value area low again, then I expect us to continue pushing down. That's still a 6.7 risk to reward ratio on a scalp play, and potentially coming all the way up to this golden pocket up here or around there, around the 115K area. So that's about it for Bitcoin. Larger time frame market structure is still bearish. If we zoom out onto the 8-hour chart, and I warned about this all last week, I made thumbnails about it, warning about the trap that the market makers like to set where they cut rates. Everyone gets hyper bullish right at resistance. We actually hit into that resistance with bear divs, and we're going to see that big drop now, completing that bigger WXY complex correction to the downside. Within the Y wave, you're looking for that big ABC within that Y wave. So a 535 within that Y wave. That could take another month or so, or it could take about the same time that this push down take, relatively similar amount of time, which would be about 18 days. So that's what I'm looking at for Bitcoin. And I'm just going to continue to play the levels. I'm waiting for it to come to my levels. I'm not looking to long or short in any random level. I'm waiting for the price action to get to my levels. I'm waiting for confirmations to be on the charts. I will keep you guys updated on what I think with Bitcoin, but right now for me, it is looking like we are going to see that bigger correction play out here. And if we do lose 105K, this is going to be very, very bearish for Bitcoin. Very bearish for Bitcoin. Zooming out onto the daily chart, we did have the multiple drives of bear div on the daily, and we talked about this a little bit on the stream on Friday as well. The multiple drives of bear div, money flow draining out of the asset as the range formed. And I've warned about this as well, guys, about distribution ranges. When you see bear divs with money flow draining out of the asset as a range forms, it is more likely to be something that could break down, a distribution that could break down. Also, if we go out to the weekly chart, on the weekly chart, we do have that bear div, multiple drives of bear div here, higher highs in the price action from 74K to 109K to 123K or 125K, multiple drives of bear div. If this money flow really starts to curve over here on the weekly, it could be the end of the bull market. I am not calling that yet because it is not confirmed yet, but I'm saying that is a possibility. Now, I do still think we could make one more high, but I do definitely think we are closer to the end of the bull market than not. And it could be within the next couple of months here that this bull market ends. Okay, but Bitcoin, we're just going to play this local range, and really the bigger correction is now become a far greater possibility for me. So I'll be looking at our lower levels of scalp longs at these areas at 111 to 111.5. Now this 110K area of support, I had this labeled as an area of support last week before we made new highs into our golden pocket. So this was really drawn Monday, Tuesday of last week. Our golden pocket was down there. So if we take that golden pocket from the lows, from our 107, 200 lows to our highs, now you can see our golden pocket is pushed higher because obviously we pushed higher on the charts. But if we look at that 786 Fibonacci level, that 786 is going to be just below that box. And if I turn on our naked daily points of controls, you can see that we had a naked daily point of control at the bottom of the box. So this box, actually now I would adjust this and shift this down from the naked daily point of control to that 786. And that is going to be really between like 109,800 to about 109,550. That would be the next level of support. But I am telling you right now, I do not think this level of support is as strong as the daily in the golden pocket. So if we lose this 111K, yes, we might come down there in finishing our fifth wave, 1, 2, 3, 4, maybe all the way 5 here. And we could see the bounce from there. But if we lose this, that's going to be kind of more bearish for me, that 5-wave impulse is coming down that far. And then after that, expect a 3-wave move up and then another 5-wave impulse down to 105K. And then, of course, we do see that naked daily point of control that's right around our lows, and so we'll be watching for the SFP of the range lows around that naked daily point of control. That is a potential area of support for me, but I will only be taking that if we confirm the swing failure pattern and then reclaim the naked daily point of control. For me, I'm not going to take a confirmed swing failure pattern. I'll wait for that reclaim of the naked daily. Okay, other than that, not too much else to talk about on Bitcoin. I did show the local resistance with the new daily level up here, and then if we turn on our weekly levels, there's no new weekly levels. We also have within this box the naked daily and the naked weekly point of control. That is about it for Bitcoin. Now let's go ahead. Actually, let's look at our order flow real quick here. Let's zoom out to the 15-minute chart. On the 15-minute chart, you can see the big drop in open interest that has occurred. Now, on Friday's live stream, I did talk about how we were seeing this local bullish CVD absorption here by seeing higher lows in the price action, lower lows in the CVD, and then our open interest was increasing here. And we were about this level on Friday. But I did say if we started to see a prolonged drop in open interest, then it's going to invalidate that bullish CVD absorption. I have seen that so much over the last 3 or 4 months, and sure enough, we got that prolonged drop. And then once, of course, the big drop in open interest happened when a lot of people got liquidated, they longed this range up here right into resistance right during the FOMC meeting, the perfect trap that I warned you guys about that market makers like to do to retail. Well, it played out again. We see this over and over and over, and retail gets trapped over and over and over. And so, big drop in open interest, big liquidations happening on the charts, and our open interest is continuing to drop here, continuing to decrease. So I expect we're not really seeing. We are seeing some. If we zoom out to the hourly chart here, some potential for bullish CVD here, but I do not like the way it looks. If we look at our this is our aggregated open interest, by the way, so it's taking all the major exchanges into play from our 107K lows. It is pretty apparent that we are right now making higher lows in the price action, lower lows in the CVD, and our open interest, I would say it's about flat. You can see now we're pretty much back down to that level. And actually, let me be more precise on this. Let's just grab a horizontal ray and let's throw it from that low, which is going to be right here. Yeah, we're even underneath those lows. So open interest is no longer increasing. We have bullish CVD divergence, but not bullish CVD absorption. And actually, we are even kind of rejecting that prior support level on open interest there. So I think that the bullish CVD divs, I'm not looking at near as much as the confirmed bearish price action. Remember, market structure is king, and market structure now is bearish, and we are seeing bear divs confirming on the chart into resistance. So I am expecting lower targets. That's it for Bitcoin. Let's go ahead and go on quickly to Ethereum. Now, Ethereum on Friday, we were coming up Thursday and Friday, we were coming up into this lower high area. If you remember earlier that week during FOMC, we longed this golden pocket down here, and I told you guys that I was going to take some profit at this purple box of resistance, playing it first as a scalp because there was a potential of continuing bearish momentum of a lower high, lower low, and then continuing, lower low, lower high, and then continuing to make a lower low. And the reason I was saying that was because overall our more macro structure, this 2 month long range that we've been in, or about 6 week long range, we were looking at that topping reversal pattern, that head and shoulders topping reversal pattern at the top of our pitchfork. If you guys want to see in-depth analysis, go watch Thursdays and Fridays live streams. I cover it in depth on Thursdays and Fridays live streams. But we were forming this range here as money flow was draining out. If we go zoom out onto the daily chart, and once again, I talked about these distribution ranges, guys. When we are seeing a range form for a month or so like this at a major resistance after taking the all-time high, and we have bear divs confirmed on the chart and money flow draining out of the asset as this range forms, it's more likely that this range breaks to the downside. Now, we are seeing a nice reaction very, very locally on taking out the lows of that range. If we zoom back in here onto the hourly chart, you can see that we did grab the liquidity at that 4,000 area. We talked about this on Friday's live stream. Let me actually zoom out to the 3 hour chart. We were looking at two levels. We were looking at the internal lows at 4,200. Well, first of all, we got no confirmed swing failure pattern there. That means no trade. And then the next level is actually the range lows at $4,000, around $4,062. And we did come down. We did SFP just very slightly, but you can see we did pierce that level, and then we got back above it. And so we are seeing an SFP of the range lows. And now we could see continue a little bit of a relief rally to the upside. But what I will say with this is, just like Bitcoin, this is looking very impulsive to me. A wave one here, a wave two, and guess where our wave two ended? At the golden pocket. This all looks like a third wave of an impulse to the downside. We could be bouncing on a fourth wave just to back test the value area low of the range that we broke down of, and continue in a fifth wave, potentially coming down to this level, this macro level of support that was below us, that I did talk about a bigger breakdown from on Friday. I warned of this multiple times throughout the week. And if we look at, let's just go ahead and look at our trend-based Fibonacci extinction here. We'll go from the highs to the lows here to the highs. We have hit that 1.618 target and even surpassed it, making this far more likely to be an impulsive move to the downside by hitting this 1.618. So now what can we do? We can look at and this, to me, the third wave might not even be done, guys, because if we look at this, I mean, I guess you could say this is a 1, 2, 1, 2. This is going to be your third 4, 5, 4, 5. Or more probable to me is that this was a 1, 2, 3, and we're still looking for 4, 5 to come down within your third wave. This is within your internal third wave. But within the bigger impulse down from these highs, we have our wave 1, our wave 2, our wave 3, which by our count that I just showed you might not be done with, a wave 4, and then a wave 5 coming down all the way down to that 382 in a first 5-wave impulse. If we see that, that is going to be our A wave down. We could see a B wave come up to our local golden pocket area, and then a C wave come down to that key swing long area of $3,500. That is what I'm kind of going to be watching the most for on Ethereum over the next month to 2 months. But now that we are starting to break the value area low of this range, unless we reclaim it soon, I give this a far higher probability, which also we were also looking at this as a high probability, because if we looked at that macro Elliott wave analysis, we're looking for a fourth wave correction to bring us down between the 382 and the 0.5. And so it is playing out exactly like I explained last week. The distribution range, you can see as the range was forming, money flow leaving the asset, multiple drives of bear div on the chart. And even very locally now, I'm going to be watching this 4270 to about 4290 as a resistance, that if we do come up here very, very locally, backtest that and reject, then I expect to at least take out our low that was made on Sunday, which is a weekend low, by the way. Weekend low, Sunday, weekend low. And that would just that would complete this smaller 5-wave impulse, which would be within this bigger 5-wave impulse. If we zoom out onto the weekly chart, we look at our weekly time frame. We did confirm a new weekly resistance above us. That weekly resistance, let's just go ahead and throw that on the chart real quick. That is going to be coming in around 4,600, 4,605. And then if we go on to our dailies here, you can see we have a couple dailies that are also formed. I'm not going to mark these out right now, but around 44.79, we have a new daily as well. And then if we turn on our naked weekly points of control, zoom into the 4-hour chart, we have a naked weekly point of control coming in right around that daily level at 44.79. So actually, I'm going to mark that daily out right now so you guys can see that confluence. Daily level, and then we will mark out our naked weekly point of control. Yeah, naked weekly point of control and a daily level. That is going to be a resistance that I will be watching. this area in here. And then, of course, if we pull a golden pocket from the rejection highs on Wednesday to our lows that we made today, and we look at that golden pocket, the golden pocket is a little bit below that, but that gold, yeah, I guess to me, it's not enough confluence. Now, if even if we came up here though, it would invalidate this as an impulse down. So you don't want to come up here anyways. If you want to maintain bearish momentum. Very, very locally, I'm looking at our range lows, our value area low and point of control of the range between 4269 and 4290, or really 4300. That is going to be our first local resistance now, because it was our support level. Now it's going to be our resistance level, and I expect to continue pushing down from there. But Ethereum, if you guys want more in-depth analysis on Ethereum, the bigger, more macro movements on Ethereum, I discussed it very in-depth on both Thursday and Friday's live stream. The summary of that is we are at the top of a macro pitchfork. We had taken the liquidity from the all-time highs, made a new all-time high. Distribution range, very, very possible here. Whatever you want to call it, Model 2 distribution, or a head and shoulders, left shoulder, head, right shoulder. And it does look like we have the possibility to break down in our bigger fourth wave correction to come all the way down potentially to 3,500, or to like that 38 to 3,700 area. That is it for Ethereum. Now let's go ahead and go on quickly to Solana. Solana is breaking down as well, guys, from the top of a pitchfork. And I warned about this as well on the live stream on Friday. Let me go ahead and get rid of this here. And we've broken this range down. This was our range that we were looking at on Friday. And we had rejected. First of all, we came up one more time and we took the liquidity into actually hitting our resistance box. Now remember, this box has been on our chart for months, 2 months. We were looking to come up and actually hit this, which was a weekly level in confluence with a naked, let's see here, let me turn on the levels. It was a weekly level, and it was our 786. It was a weekly, and our macro 786 Fibonacci retrace. We rejected from that level, finally hitting our box of resistance that we were waiting to hit. Now, once we hit that box, you can see we had our initial breakdown. We broke market structure bearishly. We talked about this on the stream. Broke market structure bearishly here. Came back up locally, back tested that market structure. Bearishly, and then we made new lows. Now, throughout the weekend, Friday and throughout the weekend, we formed this ascending channel. But remember, I talk about this a lot. After you have a quick move down and then you see this slow grind up like this in a channel with lower and lower volume, it does tend to be a correction before continuing the impulsive price action down. And that's exactly what I was, or whether you want to call it a bear flag if you're a pattern trader, a bear flag. And we formed that bear flag. You can see once we broke that bear flag down, and once we broke the point of control of our local range, we got the quick, aggressive flush down. So we can get rid of that channel now. And we have broken down below the value area low of our range, below our local range lows that were at 230. And we have broken down really to the pitchfork band. We rejected, and I talked about this so much on Friday. If we reject the top of the pitchfork, then we are going to initially work our way down to the band and test the band as support again. And this is exactly what happened. We're kind of flirting around with this band now. Now, if we lose this band of support, this pitchfork band of support, then we really could see a much bigger continuation. And it does look as well on Solana like a 1, 2, 3. We could be seeing a 4, 5 here and continuing to push down all the way down to our pitchfork midline that is going to be coming in around $197. If we look at, turn on some of our levels, daily levels here, we did bounce from a daily level today, really yesterday and today. We're bouncing from that 214 daily level. And if we look at our weeklies, we do have a weekly coming in at 206 that we do need to be aware of. Let's zoom out onto the daily chart. Actually, that daily was an old daily, so that shouldn't be there. Sorry for that confusion, guys. But we do have that daily that's coming in around 200. And remember, I just talked about that pitchfork midline. So if we mark out this new daily, let me make sure that weekly is a fresh weekly. That is not even a fresh weekly. Wait. Okay. So our level of support below us is going to be around that 200 to about 197. If we now zoom back in onto the 4-hour chart, if we lose this pitchfork band of support here, then look at where we would potentially drop down to. There's not a lot of support within this push up that we're seeing here, and we could potentially push down to hit into our pitchfork midline where our weekly level and our daily level also resides. If we also look at our previous kind of range, that this range in here, and we look at this range and we pull our point of control of that range, point of control is very close to that level as well. Yeah, naked weekly point of control is there. So I would say our next box of support is going to be between 203 and like 200. And that would give us in potentially a couple dollars lower to hit the pitchfork midline. So that is our next support level there for Solana. Now, I do think that Solana is going to continue down all the altcoins and Bitcoin. This looks impulsive to me. And if we look at our trend-based Fibonacci extinction, let me clean up this chart for a second here. I'm just going to turn off some of these levels now so it's not as confusing. And we can throw on that trend-based Fibonacci extinction, and we can look at this potential impulse. You can see we're bouncing from the 1.618. Now, that is your common wave 3 target. Now, if you bounce from the 1.618, it makes it a far greater probability that this is going to be a 5-wave move down. So now what we're going to be looking for locally, you can maybe even look for a scalp short from this area. If you pull your Fibonacci from the highs of wave 3 to the lows of wave 3, and you turn on your wave 4 targets between the 0.382 and the 0.5, those are going to be your targets for a potential wave 4 to end, your 3-wave wave 4 to end before coming down in a wave 5, creating that bigger 1, 2, 3, 4, 5. So I am looking at actually very, very locally, this 227 level looks very nice because you can see that 0.5 is in confluence with the top of the band. And if we work our way back in the band, there's a probability we can make our way up to the top of the band. And then we could see that last big push down in a wave 5. So very, very locally, 227. I'm not going to put a box there. I'm just going to throw an alert line on this. Let's do that. And then let's say and I will only short that if I see local bearish divs coming up into that area of resistance. But overall, it does look like Solana's breaking down from the top of the pitchfork. We finally hit that resistance that we were looking to hit. And the next major level of support for me is going to be down near that $203 to $200 level of support. That is it for Solana. Let's go ahead and move on to Sui. Sui did reject from our resistance as well, guys. We talked about this resistance at least a week ahead of time. The point of control of our upper range, this was our range that was the entire descending channel, this entire corrective descending channel that we've been in for the past couple of months. And we did say to watch for the fake out of that channel into that golden pocket and that point of control. And if you do reject that and fall back within the channel, you could see a much bigger drop. Now, we have seen that drop. First of all, we had a couple levels of support. On, I think it was Saturday, someone in my Telegram asked me about Sui. And I said the first area I'm even looking at potentially taking along is going to be this liquidity grab into your golden pocket, or into your point of control, excuse me, and into the value area low of this upper range. So it's the point of control of a much, much larger range that goes all the way back to November of 2024. And it was your value area low of your few month long range, 2-3 month long range. No reaction there at all. No liquidity grab means no trade, right? Remember, in order to trade an SFP, you pierce the level and you reclaim it. If you do not reclaim it, you do not take the trade. So we did not get the long there. We busted straight through this support level and we came down to the next support level, which was that 786 Fibonacci pulled from the lows of this entire move up to our highs and in confluence with that anchored VWAP that is from the daily or the weekly lows down here at this larger range lows. This is our larger upper range here on the daily time frame. So the anchored VWAP from those range lows was coming in at around 327, and that's where we're seeing a little bit of reaction right now. Zooming back into the hourly chart, you can see that we are bouncing from that level of support, which we did have marked out ahead of time. We had this level marked out ahead of time. Now, very similar to Bitcoin, Ethereum, and Solana, this does look like impulsive price action to the downside here, and I do think we could continue pushing down on SUI as well. We were seeing bear divs on a lot of these coins. If we look at our trend-based Fibonacci extinction, we'll go from the highs to the lows here to the highs. We did not quite hit the 1.618, and we are bouncing from that 1.236 in the 1-to-1 zone. So at least for SUI, it's not a confirmed, to me, it's less clear on whether this is impulsive or not. Right now, it could still be corrective. If it is corrective, we need to bounce now, and we need to reclaim 348 to 346. If we cannot reclaim 348 to 346, that's your local resistance above now, being that value area low and the large range point of control. If we cannot reclaim this, then I do think we will see continued downside. So as we come up here in the next day or two, we really want to not reject on the bearish backtest of this area. If we see something like this, rejection, I do think we'll make new lows. Now, if we can get back above it and flip it, then yes, maybe this was a three-wave move down, and we are going to continue pushing higher on SUI. For me, not super clear like Solana or Ethereum yet, but the next big level that we looked at was that 295 to 288 level. That is going to be your larger golden pocket in confluence with a naked daily and a naked weekly point of control. If we also look, there's a daily that's a little bit below that. And if we look at our weeklies, yeah, the weekly is going to be, there's no weeklies. There's one weekly that has not been tapped. Let's actually throw that on the chart. Was that weekly hit? No, the weekly, at least on Coinbase, was front run just barely. So be aware, we could still be in our third wave down, though. It's still continuing. For me, the next major level I'm interested on SUI is between 295 and 288. That's it. Anything else in between, we do have an internal liquidity grab at 311. If actually, I would still play along if we got the confirmed swing failure pattern from this low at 311, but only if we get a confirmed swing failure pattern. But for me, I'm really going to be looking to come down to this golden pocket area between 295 and 289. And we got to pull that up a little bit higher. Yeah. So that is SUI. Let's go on to Say. Say is also dropping down. We did reject the top of the upper band. Remember, this was our 786 in confluence with the value area high of the range and the top of the pitchfork band. We talked about this on Friday's live stream, and we did see the rejection. We attempted to get above the value area high. We could not. Now we have dropped and lost the band, and we have dropped all the way to our level of support that we marked out, which was the 786 in confluence with the point of control. And you can even see we even pretty much wicked to the value area low as well. So reject value area high, come down to value area low, just range trading. And after we rejected, we tried to break out of the value area high here on Thursday and Friday, and were rejected. We talked about this on Friday's live stream. We could, especially if we broke this lower support down here of the lower part of the band, then we were going to come down to this level, and we have. Let's zoom out onto our weekly chart. Now, we do have some new weekly resistances here. And if we zoom out onto the daily chart, we do have that daily resistance that's above us as well. There was also a daily level here that at that 786 in that POC, we had a daily level. And that was the level that we were looking at coming down to. 2 hour chart. So I do think that there's a potential that this is going to be continued bearish price action to the downside. Looking at this now, the one thing with this is we did come up and we did come hit that 886 there, and so it does give a higher probability to take out these highs. But we are seeing a break in bearish market structure, and if we look at that 1.618, it has not been hit yet. There is a potential that this range holds, this like level of support that we're at right now, or maybe even coming down just a little bit lower to hit that 2779. But if we take our Fibonacci from the highs here to the lows here, and we look at that retrace, we put on that 886. Oh, actually, we did not hit it. So, okay, because we have not hit that 886, then it doesn't increase the probabilities to take out this high. I'm sorry. I thought I was remembering us hitting the 886, but now forget what I just said about that. We are breaking market structure bearishly. Even though we haven't come down to that 1.618 yet, I do think it's highly probable that we do. And continue pushing down here, maybe seeing a little bit of a relief bounce from this area to come up to the pitchfork and then come down. So that pitchfork resistance band is about 31 cents, right? Pretty much right at 31 cents. If we come up to 31 cents and reject 31 cents, then I expect new lows to be made. And we also have these semi-equal range lows. Let's throw those on the chart. We have the liquidity at 2684, and then we have the liquidity that was front ran from that low at 2627. So I think if we break this level of support that we're looking at now, it's a very high probability that we come take the liquidity, and we'll probably take both of them together. Seeing that bigger 1, 2, maybe coming down here for 3, 4, and then 5, take the liquidity, and we could see a bit of a 3-wave relief rally before continuing down here to 20 cents. And remember, we're ultimately looking at this is our range. This is our upper range. And now within this upper range, say has rejected, let me hide this range for a second here. Say has rejected our upper band 1, 2, let's say this is 3, 4, 5 times now. We've rejected this upper band. And if we keep rejecting this upper band, eventually we're going to break this market structure bearishly and come down potentially to that midline, which is going to be resting around 21 to 20 cents. That's it for say. Let's go into XRP real quick. XRP is seeing a really big drop. Now, we talked about this scalp long on Friday. This didn't play out because we did not get the SFP. So remember, we talked about on Friday, do not take this unless you get the confirmed SFP. You can see we shot right through it. No reaction at all. So no long was taken. We can get rid of these. We broke down from this upper range here, and we broke back inside of the channel, the descending channel. We were attempting to break out of this descending channel corrective structure. We broke back inside, and what we did is we saw actually a really big wick on XRP, which happens a lot on XRP. XRP, because it's so highly leveraged, we see really big wicks. Like in early February, we saw that too. Way back in early February, right here, we saw a really big wick when we have these huge crashes. And so again today, we saw a really aggressive wick on XRP, came down, and we took out our lows from September 1st already at 269. But you can see it was an SFP of our range lows, or our lows of, our range lows of this range. And so SFP of range lows, we are bouncing, and overall we're holding this support level, even though the wick, yes, that wick that happened there would have invalidated your trade. You would have got stopped out. But now that we just wick there real quick and then we're holding our level of support, what I'm going to be watching for is the back test of the channel now to see if we're confirming reentry back within the channel and if we're going to continue breaking down here. Let's pull that volume profile and let's look at, so we've broken down the value area. We've broken down the POC, and we're about the value area low right now. We're hanging around the value area low. That was an old box that we just never deleted. I would say definitely looks impulsive here. Wave one, wave two. This is all a wave three, which by the way doesn't look completed either. One, two, three, four. We looks like we need to make one more low just to complete our third wave of this bigger. So three, four, five, and it does look impulsive to the downside. Money flow looks really bearish. We just printed hidden bear divs here, so I do expect XRP to keep dropping to the downside. Let's throw on some of our levels here. Weekly levels, daily levels. Okay, let's zoom out onto that weekly chart. Unfortunately, what we could look at now is this was our multi-month long range here. We broke out of it. And if we fall back inside of that range, we can expect a much bigger drop, potentially all the way back down to the bottom of the range. So we'll pull that volume profile. Let me zoom in onto the daily chart. And yeah, coming down to the value area high of that range, which is where you can see our anchored VWAP is from our prior all-time high. Let's also throw our anchored VWAP on from that range low. Yes, so that's our major area of support. Prior range value area high in confluence with your two anchored VWAPs, in confluence with that midline, channel midline. So let's zoom into the 4-hour chart. This is the area of support that I would be looking for at least some sort of reaction from. And remember that value area high. Okay, so let's pull this up. About right there. Between 262 and 256 is our next big support level there for XRP. I do think it is a high probability that we are going to get down there because of this impulsive price action that we're seeing to the downside, the break in market structure. Yes, we've grabbed the liquidity from our lows from September 1st, and we are seeing a bit of a push back up. But to me, there's nothing else that's going to keep us from coming down here if we do reject and create that fourth wave. 1, 2, 3, 4, 5. And then remember, 1, 2, 3, 4, and then potentially even coming back down lower for 5. So it looks kind of bearish to me. Money flow doesn't look the best here. Looks like the correction is going to continue for XRP. Now, Chainlink did come down to our support that we talked about so much. I talked about this support. Let me clean up this chart. This was just a triangle we were looking at on Friday's live stream. We did reject the resistance. Now, this was our golden pocket. And if you look at our first initial push down over those 2 weeks, we came back up to that golden pocket, and it was also our value area high. We rejected the golden pocket and the value area high, confirming a lower high on the charts. Now we're seeing 1, 2, 3, 4, and we could even come down for one more low. Now, I don't like that too much, and it would actually be better to see the bigger WXY correction, which is a W here, X, and then a 3-wave move down and a Y to backtest that macro support. Now, remember, we've been talking about this on our streams and our videos for a long time. To SFP our range lows, this is all the price action breaking out above our macro 2-year long range value area high. That is this macro volume profile value area high. It goes all the way back to 2023. So we broke out of that value area high. In a healthy market, you'll come back down, you'll back test it. If it holds the support, you'll continue working your way up to your next major levels. So we finally came down, took out our liquidity at 20.85. We were looking for that liquidity grab. Local level of support, we did see a bounce from, but then we got the lower high and rejected. So it was a good scalp position. This area here was a very good scalp position. We talked about the long from that on Friday. I did not catch that long on Friday, but if you took that, that was a good valid setup, a good valid scalp. And now we're looking at our larger SFP into our macro value area high. So we're hitting a macro support level for me, very macro support level. Now, the way this looks for me, money flow still looks pretty bearish here. We're just crossing over into the red on the daily time frame, and we do have bear divs on the chart here. Higher, why does that keep happening? Higher highs here, lower highs here, and money flow is draining out of the asset here. Same with NAMI, bear divs and bear divs on money flow as well. A triple drive of bear divs on money flow. So with the way our larger bearish signals are printing, there is a potential that we're not going to hold this bullish back test. It's not going to be a three-wave correction back test and then continue up to your next major resistance, but we're going to fall back inside this volume profile and start to see a much larger drop to the downside. I don't want to see that on Chainlink. I own Chainlink on spot, and I was hoping to see more bullish price action, but new data, and the data does suggest that we could lose this 20.6K level of support and continue down. And really, I would be looking to continue down to at least touch this pitchfork band. So we have a couple interesting levels down there. We have our prior highs, cycle highs, anchored VWAP, but actually I wouldn't be watching this one so much. I'd be watching the anchored VWAP from our lows at $10, and that anchored VWAP is going to be coming in around $18, right where your pitchfork band of support is. Let's look on the weekly chart. Yeah. Let's just throw on that. Okay, so weekly levels. We do have that weekly level that is going to be coming down to about $16. Now, I wouldn't say that's the first level. I would say the first next big level of support is going to be between the 18.1 and 17.8. That's going to be your anchored VWAP in confluence with the top of the pitchfork band. Because if we do ultimately reject and form that distribution range up here at the midline of the pitchfork, then we can expect to come down to the next major pitchfork level. Okay, there's that. And then if we lose that, it's going to be your weekly in the bottom of the pitchfork band. We also have a daily that's down there, 16.3. And you have your naked weekly point of control. So between 16.3 and 16.6, I'm actually going to get rid of this guy for now. And we're going to talk about, let's throw these on. $16.6 to 16.3 is a major level of support where I'd expect some sort of reaction. First at the $18 mark. But we are at macro support on Chainlink, and if Chainlink is going to remain overall more macro bullish, then this support level does need to hold. We do need to hold this 20.6. We need to not fall back inside this volume profile. If we fall back inside this volume profile, we could see that correction all the way down to $16. We are seeing a nice bounce right now from that volume profile, and there is a potential that we can get the push back up. We grab the liquidity of these range lows, this upper range lows, and we are maintaining above the value area high for now. Is what we need to watch for now is the bearish backtest of the range, and let's pull that range all the way. This is our range here, and that 22.7, let's say 22.7 is the bearish backtest of the value area low. So if we come up there and we backtest that value area low and reject, then we could expect a new low to come in on the charts. That would be our local resistance above. And if we pull that Fibonacci from the highs to the lows and we look at that local 382, 382 is going to be a little bit below that area. Let's do this. Yeah, and then let's look at our golden pocket here. Okay, golden pocket's going to be near your range point of control. I don't like it so much. If we hit this golden pocket at the point of control, then that will be in some ways an invalidation for an impulse down, or at least locally, as this as a wave 1, wave 2, wave 3. If we come up here and hit this golden pocket, it would invalidate that as a 4 or 5. If you hit the golden pocket on your fourth wave retrace, it invalidates. So be aware it still could reject from this 23.3, let's say, 23.2 to 23.3. That is going to be a local level of resistance. But if we come up there, that actually would be bullish. That would be a bullish sign that maybe we're going to maintain this macro value area high and continue pushing higher. That's it for today, guys. If you got anything out of the video, please like the video. Please subscribe to the channel. We do have a few partners of the channel. BYDFI is the main partner. They are VPN and KYC free. All you need is an email and a password to sign up. If you do sign up using my affiliate link and deposit $100 with BYDFI, you can get access to my Telegram community. You'll get a $50 deposit bonus and 20% off discount on trading fees, up to $8,100 in futures trading bonuses. To get into that Telegram community, there is a link in the description. Click on the link, deposit the money. Once you're there, type in /verify and then your user ID, which would be right up here for you. Mine's custom, it's Divine Hood, but you'll have a string of letters and numbers. And then you can get into that Telegram community. We do have NAMI trading. NAMI is a momentum and money flow indicator. If you're interested in purchasing that, I use it for entry and exit confirmations for my trades. They are running a 50% off special for a limited time for my users, my affiliates. The link for the discount code are in the description. And then lastly, we have MEXC and Bybit, both offering discounts on trading fees and futures trading bonuses if you sign up with them. All the links are in the description below. Thank you guys so much. I will be streaming tomorrow at 3 p.m. Eastern Standard Time, and I will see you tomorrow.